All right, good morning. You guys ready? The coffee's not very good today. All right. Let me get things started. Let me move things around. All right. Hello. Yeah, how's your mum? Welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance. Hang on, I got to move this around. I got to move that. Nope, that's on the wrong side. I got to move this here. I got to move that there. Oh my goodness, life is so complicated. Let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. My name is Wayne. I'm a currency trader just like you. I've been doing this over 20 years, so I've learned a few things, good, bad, and ugly. If you ask questions, maybe you'll pry some of that experience out of my brain, and I'll share it with you for the financial cost of $0. But there does come with an obligation, and that is to click the thumbs up button on YouTube, maybe leave a comment. Tell YouTube that this is quality content. That's pretty much it. So I can make $50 in YouTube ad revenue every single month. Oh, I need it so I can buy that yellow Lamborghini. So anywho, welcome. Let me know how it can help. Technical, fundamental, trader psychology. It's all good. It's all valid. In fact, I'm writing books on all three topics. Yeah. I'll be writing my book today. Got to keep focused. I got to keep grinding, man. That's what writing is. Grind. Keep grinding. How long can you take the pain? So let me know what you want in those books. In the description below the video, there's a link to my first book, Strategic and Tactical Forex Trading. It'd be great if you left a review, ideally a good one. A second link in the description below is to fxbootcamp.com, a training and education community that I've been running for, I guess, 20 years. It's pretty good. $88 a year gets you 88 hours of lectures on trading Forex. Technical analysis, fundamental analysis, day trading, swing trading, trader psychology, macroeconomics, monetary policy, and central banking. Oh my God, there's so much. There's a link to Quant-in-a-Box.co, an algorithm that sits on the Google Cloud and does macroeconomics for you. Hey, I think there's even a link to a video in the description below that will teach you how to do it all for free. And where to get the information for free. Yeah, cool. So that's in the description below. There's also a link to tradersway.com. They're a foreign exchange broker. You need one. I recommend them. And based on their actual performance and not false promises made on banner ads or something that unscrupulous Forex brokers seem to do on a regular basis. When the Swiss National Bank went out of business, lied to brokers and the brokers went out of business, Traders Way was just fine. And that proved to me they actually execute your trades as promised. So anyway, so lots of resources, tradersway.com being a major one. Okay, I posted a poll and you've answered the poll and you responded. You're most interested in trading euro today. It's only moderately strong, but okay. Maybe you're selling it? Nobody on the CAD. Interesting. Pound 20%. Yeah, okay. So let's take a look. We'll start with the dollar pairs. And you like the euro. Let's take a look at euro. Okay, so yesterday we trapped our euro. Let me get my draw-on tool. Okay, so a couple of weeks ago we had a down, 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 up, up, sell. Down, 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 up, up, sell. So there's a second trap and break. Down, 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 down. Now last week I took profit down in here. And our trade plan on Thursday was have this come up and sell again. Like we did here. Oops. And then like we did here. And for 24 hours it did nothing. And today it has broken down. Okay, breakout, pullback, sell. Okay, and now working our way down. Okay, this is going to be somewhat of a concern, but you can see it's usually just sets up as a roll reversal, which means there could be a little bounce here and then a break like what occurred a few weeks ago. Okay, boy, that didn't come out very clear. Let me try this again. A few weeks ago, you could see that it came down, it touched it, came up, and then it broke. And then later on provided a new entry. That's called roll reversal. So if we do something like that today or tomorrow, I wouldn't be shocked. Okay. And I can barely fit that in. But if it did something similar. Because it is a pattern, right? That's one of the things we're doing as technicians, is trading patterns. Okay. So you can see the rinse and repeat of this. Okay. Very cool. So my stop has moved a little bit closer. In fact, I'm just going to move it to break even now. Cool. Nice. Boop, 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 boop. Okay, Aussie was another one that you guys are trading, so let's take a look at that. Here's a reminder of our trade plan that I set up last week. So once again, I think Thursday morning I took profit down in here somewhere from a previous trade, which was probably this one. And then the swing trading group meeting, our trade plan was outlined like this, that we would hit our target early in the week. And you can see I have a line here. And if we get down there early in the week, I would expect a big pullback. So definitely in the camp of taking profit. Okay. And the likely target is here. The hopeful target is here. For the week, right? Now the monthly target is further out. Okay, the monthly target conservatively is down here. But the thing is, we don't have a good setup for that. So I'm going to be more conservative. So I can leave it here at the weekly target. Okay, so my stop is 22 pips and my limit is 91 pips. I'll tighten it up a little bit. So, okay, risking 22, going for 75. All right. Next one you guys are interested is in pig. Now, I also had this as a sell earlier, and I couldn't get the trade because the first two hadn't worked yet. Okay, but it is valid, and so some of you are likely on this. And if we can get a trend out of it, I'll just get the next pullback. That's all. Okay, back this out a little bit. Okay, the target is down here. Conservatively, we'll call this what? Well, I guess aggressively about 23. And we just broke 24. So there's about 100 pips left on this. Your entry is about 24.50. So let's just say the whole move for the week is about 150 pips. Okay. You may notice at the top of this monthly market is R1. So one thing to be concerned about is we get down into here where we are now. We got 2 shakes of a lamb's ass from that. And it could do this. Okay, so anyways, waiting for a pullback. This looks good. At the time, though, the Kiwi was quite strong, so it would have been difficult to sell it like that. You can see based on the breakout strategy, it broke out, rallied back, gave you the roll reversal long gone. So we are now done for the day. Okay, the sell zone was here. The target for the day is here. It's all pre-drawn. We knew this yesterday. Just a simple day trade. So right now, if it rallies up to 62.5, well, I guess that's where we are now. 62.75. It would be in a sell position with a target of 62.00. So about a 75 pip day trade for tomorrow. So sell the rally. Assuming that there's no news, assuming there's no new news on the debt ceiling, because obviously that can change everything. Let's do gold, oil, and Bitcoin. There are rumors today created by Saudi Arabia that Saudi Arabia could cut production and that they want oil prices to go higher. And there you go. That's what's going on there. Okay. And if you're attended my Quant-in-a-Box live presentation this morning, okay, it was a couple of hours ago. We were still here, and they already, so we discussed exactly what happened and what was said, and that it would likely push oil up. And well, okay, there you go. Back above the moving average, up, 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 down, down, buy, up, 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 down, down, buy. Okay. And now we got some new fuel for our fire. Okay. So now what you would do is, because obviously it's too late to buy high, you got to set that up. And the trade plan for today is some version of this. Bulls don't buy green candles. Bulls buy red candles. Johnny wants some natty. All right. Johnny want natty. Johnny get natty. Okay, kicking off the monthly. So this is a full bore reset, but yeah, this is interesting, huh? Janet says, should I only be using my 5-minute and 4-hour to buys at buy? Well, why would you limit yourself to only those two, Janet? And should you trade only at buy and sell zones? Well, what other way of trading is there? Right? Bulls only buy at support, Janet. Bears only sell at resistance. So, yeah, so you need to know those zones for sure. And should you only use 4-hour and 5? Well, 4 hours strategically, sure, yeah. And 5-minute tactically, sure. But one of the words you used was only, so like, would you never look at, so, but yeah, you could do it that way, but why would you throw out all the other information too, right? But that's a place to start, I suppose. All right, like a classic example, Janet, is this is a price in which we know bulls are going to exit. We know that. So when price gets up there to this price here, 163, let's say, could you drop into a 5-minute and look for opportunities to sell? Yeah. So here we are in the 4-hour. So you get to 163, drop into a Cinco. It's too far back for me to fit in there. But anyways, could you get into some of these moves? Yeah, for sure. But you said only. Okay. You might find it cleaner on a 15-minute chart. You can see it's not much different. Okay. But if you didn't have this at a take profit zone, then everything else is irrelevant. Because there's no way you'd be able to predict that move in that gas. There'd be no way to know that that was going to happen. Okay. But we knew a month ago. Like, for example, the basics, right? This is a buy zone, obviously, and this is a take profit zone, obviously. And we knew that way back in April. So, yeah. And if you wanted to, and I think what Johnny's saying is, what's the next part of the cycle? Okay. Is it like this? Yeah, could be. Could be. If you're a trend trader, that's the way you're thinking, faux show. You had the pullback, now you have a role reversal, and you want to do some continuation, right? Still a lot of time on the monthly chart, but yeah. Gold still not up. Notice, right? Up, sell. Kicking off the 21. Today, this matters. This matters. Oh, where's my drawing tool? There we go. This matters. If we fail to make a lower low, it's going to go for the higher high, higher low. See, bulls can actually start buying now. Check it. I can tell you all about it. So we're in a huge uptrend. We blew through the monthly pivot points all the way to the R3. Hasty. Then two major yen pairs hit their monthly targets, which activated profit taking. And the Japanese 225 is down today. There, I just checked it. I know exactly. There's no need to check. If you stare at your charts 27 hours a day, you don't need to check. But I can show it to you so that you can check it out. Let's do this. Okay. Do that. Okay. And one other comment, Hasty. Okay. Everybody in FX Bootcamp knows that this is the line in which that is likely to occur on a monthly breakout. This is a monthly breakout. And the projected top in that scenario, even though it doesn't happen very often, it does happen, is this line in the sand. Not this one. Not that one. No. Right? No, each of these lines have a different meaning. So anyway, so we hit that line and it stopped. Okay? Cool. So it could change things, you know. This could change things. It's not a projection. I'm not saying it will. But because it's so out of position, yeah, it may change things in which people take their profit and run. Okay, now you'll notice that while that was happening, here's the CAD yen I told you about. It had double topped and dropped off the take profit zone, pushing down, right? Negative forces. Aussie did the same thing. Negative forces, right? Definite profit taking existing there. Okay, negative forces there definitely can put a roadblock on all of that. So yen strength typically happens in the scenario that we're looking at. But we're going to see today if buyers are going to drive this up on support. So like, obviously, there's a support line there. We'll see if buyers are going to try buying that. Okay. Kiwi is through M5 but not R3, so there is room if they want to do another rally. R3 would be the target. M5 is irrelevant. You might say, oh, look at the M5 at 67. Look, is it? No. Relax, dude. No, I'm not interested in M5. I don't care. They carry different weighting. Okay. Euro is nowhere near anything. It's such a laggard that it's just, there's nothing going on there. It is crazy where some of the commodity currencies are already in monthly targets and Euro yen hasn't even started the move. Okay. Here's my USD yen. As you can see, I'm using PSAR to manage my stop loss. I have to update it now. Okay. 1, 2, 3, 4 more pips, right? 4 more dots locked in. PSAR is managing my trade based on volatility. It's not, what do you call those stop losses that, the lagging ones that just follow your trades? I hate those. What do they? Moving stops? I can't even remember what they call them. I've never used them. I don't like them. Trailing stops. Just I don't use them because think of the logic of somebody that uses them. I want a 50 pip trailing stop loss. Therefore, I am going to throw away 50 pips no matter what happens because I'm not man enough to make a decision. That's how I feel about it. And if you're like, Wayne, why the gender bias? I was talking about myself in third person. And I I'm a cis white male. So that's why I used the gender. Gotta be careful. Gotta be careful. So anyway, so that's moving. My original entry was down here, 133.5. We're at 138.5. So it's exactly 500 pips again. Exactly 500 pips. And I still got some room to the upside. Nice. It looks like PSAR is about halfway, so I have about 250 pips locked in. Actually, exactly, look at that. 252 pips locked in profit. Thank you, PSAR, with 500 in floating profit. Lovely. Huh? 500 pips. Can I get some knuckles for that? Hey. You got to know when to hold them and know when to walk away and know when to let them run. Yeah. 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 Master. 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 Go back to commodities, maybe? Yeah, so I got to watch gold. Gold is interesting. I'd love for gold to drop all the way back to 1,800 and then buy it. Joel says swing trading and day trading for $200 a month. Yeah. Yeah. Oh. So I guess the big move today to play on is the WTI. You need to be on the clue train fundamentally on that. This is not a technical move. Saudi Arabia wants oil prices up. Okay, so you gotta be on that clue train. So that's interesting. And then of course the other thing I'm watching today is S&P 500. We double topped. I almost like it. It's weird. I almost want it to fall because I positioned my retirement portfolio to do just fine if it falls. Richard, OPEC speaks tonight? Well, I was talking about something that happened last night, so I'm not sure which one you're referring to. But the next meeting is early June, very early June. Roger says, Wayne, good morning. You were fascinated by the oil class, wondering if you have a group solely focused on energy sector. No, but that might be in the future. There are some major changes coming in the next 5 years. Actually, I'm being a little facetious, probably even in the next 1 year. A lot of positive changes coming because I know you guys are interested in a lot more than just Forex. When I first started FX Bootcamp 100 years ago, it was something unique and new and never offered before. And it's enough. But now that I've been doing this for 20 years and, went through the process of getting my Series 3, that's where I learned about fundamental analysis, because it's all the Series 3 and the Series 34 are all about fundamentals. So I was really exposed to a great deal or great fashion to fundamentals way back then, which was, I can't even remember, 2007, 2008, whenever I got my Series 3. So that was quite an interesting learning experience. And I learned more and more and more about macroeconomics. And it shaped my view, especially when I learned about correlation, that I'm like, wow, there's something interrelated here. The euro dollar doesn't move just because of the euro dollar. And the euro doesn't move just because of the euro. The euro could move because of stuff that has nothing to do with the euro. And I was quite fascinated by that. Many years ago at FX Bootcamp, we had a wonderful person named Kurt Worley, who was our quantitative analyst. He had a master's degree in applied statistics, and so he did. So every week I'd say, "Hey, Kurt, could you do correlation studies?" And he had these fantastic correlation studies, just fantastic. And I started to learn about how everything is interrelated and how they sort of are impacted as pairs by news. And then, then later on, going to Harvard and getting that degree in macroeconomics furthered that interest. So now, long story short, this is what I'm getting to, is I love Forex and I think it's the best thing ever. But I also love trading the stock market and I love following the bond market. I love gold, oil, and Bitcoin, right? But I also love real estate. And I'm like, they're all impacted by similar things like global macroeconomic cycles, but by local business cycles. So you have macroeconomics, microeconomics, and it all goes in there, but we're all trying to do the same thing, right? Making our money. You wake up in the morning, wake up, you got to make the money. And so to me, it's all just money. Right. Well, interest rate cycles are determined or dictated by the business cycle. Okay. Okay. Lowell says, Quant-in-a-Box question. Am I doing Quant-in-a-Box at 5 p.m. Central Time anymore? No, I'm doing them in the mornings. They happen as 3 hours before the stock market open. Okay? And you get notifications, so you should check your spam folder. But I'll show you. Let me show you. Let me log in. Let me go to the dashboard. Okay, check this out. Latest video, Tuesday, the 23rd of May. Oh my God, that's today. I know, right? There it is. Really indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. So let's log into the database here. Nice! Look, it's so pretty. Oh my God. Okay, now this video is released on YouTube at 10 o'clock. So 90 minutes from now, even if you're not a subscriber to Quant-in-a-Box, you will get your version at 10 a.m. Although, to be honest with you, I forgot to schedule it. So maybe on certain mornings I'm going to forget. So let me actually pull that up now. YouTube.com/@Quant-in-a-Box. I'll pull this up, right, just so you know. So I'll remember to put it up here. I'll try to remember. But see, here's yesterday's, right? Quant-in-a-Box Live. Lovely. Okay. With your smile so worn and your teeth so green. Yeah. Okay. So Favor says, I can't see today's Quant-in-a-Box on YouTube. Yeah, you'll have to wait till 10 or pay the money. You can attend live or watch it right after the live session. It's only money, Favor. So, yeah, going back to Mr. Lugo's question about am I going to have an energy focused group? I want to expand our community to have more than Forex. Okay. Including oil, gold, crypto, real estate. Yeah, energy, faux show. So stay tuned for that. I think we're going to have a wonderful, amazing year as a community. Mohammed says, these breakdowns you do in Quant-in-a-Box, what time is it available on the website? I do it live at 6:30, usually around 7 or 7:15. The video is up there. Okay. So yeah, London lunch. Mohammed, it's London lunch, right? Right around there, right after lunch. All right. So anyways, going back to this, based on portfolio construction and macroeconomic analysis, okay, I'm set to not be hurt by a move like that. That's the biggest thing. Okay. And that's the other thing that I'm going to do, or I am actually doing. I will launch my hedge fund that creates personal endowments, okay, and charitable funds. Okay, but they're all sort of, they have to be tax-free type accounts. So you're either retired and it's your retirement fund. So not right, non-taxable, retire. Okay, you're a foreigner, so you don't pay taxes. Foreigner. Okay, or you have enough money in your life and you want to donate to charity. Charity, sorry, I can't spell. So anyway, so I was actually talking to a friend of mine the other day, and we're talking about this, and I'm like, you can grow your principal, and he's like, I don't care about the principal. I'm like, well, do you want asset appreciation? He's like, no. Isn't that cool? I'm like, you asshole. He's like, I don't need any more money. Yeah, there are people like that in the world. There's a lot of people like that in the world. There's a lot more poor people. But let me tell you, there's a lot of people in the world, they're like, I don't need any more money. What would I do with it? Okay, so what you could tell them is, well, you can donate it to charity. So let's say they have $10 million they don't need. They're like, if you turn that 10 million into 11 million, it wouldn't matter, right? Because you're like, you're not using the 10. So what do you need the 11 for, right? So what you do is you say, well, if you let me manage it conservatively, okay, it'll produce, from the 10 million, I can produce $1 million in income. Income, nothing to do with the assets, just in income. So I'll say, I'll tell you what, put that in there, put the 10 million in my charitable fund, and I'll manage it. It'll make, just in income, not asset appreciation, just in income. You'll earn $1 million, and then at the end of the year, I'll donate to your favorite charity. Okay? It goes to the charity. And so at the end of the year, $1 million in their name goes to charity. So they get tax write-offs and the charity benefits. And now their fund is back at 10 million. We turn the 10 million into 11 million. We give 1 million to charity. The charity benefits. Okay, the investor gets a tax write-off. And the account goes back to 10 million. And we just do this over and over and over and over and over and over. Every year, $1 million goes to their favorite charity, and the money just sits there. The assets never really appreciate. And if they do appreciate, maybe the stock market goes up 10%, right? And this year, instead of earning $1 million, it earns $2 million. All right, well, $2 million goes to charity, and we push it back. Okay? So I'm setting that up. If it's your retirement account, what you do is you compound. And I guess our goal would be to turn this into 25 million. Well, wait, those numbers don't make sense because you wouldn't be thinking that way. All right, so you turned your, let's say you got 300,000. That's off too many zeros. Okay, you have 300,000 and you're going to retire in 15 years. So our goal is to turn that into 3 million. Let's say, so you retire with 3 million. So what you're doing is, as the assets appreciate, that's good, you're benefiting. But as you're collecting income, you're reinvesting. So the cycle is different. There's no cycle out. There's only a cycle in. And then you hit 70 years old, let's say. There is a magic number, what is it, 71 and a half or something. And what you do is now you start siphoning money out. You're going to be required to start sucking a little bit of this 3 million out. But remember, out of 3 million, you're earning 300K a year. My goal for you is just like the super rich person was donating money every year to charity. No, you're donating to yourself. This is the income you're living off of. So now you're fully retired, okay? And you have 300,000 in income coming in. Plus, you're going to be required, and I don't recall the number right off my top of my head, but let's say you're required to take 200,000 a year out of your $3 million account. So now you have to find, God help you, find a way to live on only $500,000 a year. Now you're going to have to pay taxes on that. So that's going to change probably back down to 300K, right? So how are you going to live on only $25,000 a month for the rest of your life? Oh, probably comfortably, right? Because by then you probably also own your own home and all that kind of stuff. And you know, when you're old, you just eat cat food twice a day and you're fine. You can live low. Live low. Okay. Well, here's the thing, Roderick. Most people don't save enough for retirement. I can tell you how to become a millionaire. Okay? Well, first of all, get educated so that you can earn a good income your whole life. Instead of having a job, you have a career. And your company provides a retirement account solution for you and all that kind of stuff, right? And you save somewhere between 20 and 40% of your income. Now, people don't do this, and that's why they're poor. Because it's guaranteed. No, well, it's not guaranteed. It's just math. So let's say you put 33% of your income aside. This is very, very tough because you're going to not drive as nice of a car as you otherwise would. You wouldn't live maybe in, or let's say you wouldn't have a super beautiful TV. You wouldn't have a vacation property sitting somewhere, or let's say instead of the property, you don't like splurge on expensive vacations every summer, all that kind of stuff. What I'm trying to say is you defer your gratification. Instead of leasing a BMW for $750 a month, okay, you buy a 6-year-old BMW. Or something. I mean, you got to be smart with your money. My point is, doing something like that for 30 years, you'll have millions of dollars in the bank. But you'll have a 55-inch TV, not a 70-inch TV. It'll be 4K, not OLED. Your cars are going to be 6 years old, not brand new. Okay, that kind of stuff. You're going to stay small, you're going to stay modest, and your number one goal is to save money for your retirement. Simple enough. Defer your gratification. And let me tell you, a lifetime of having older TVs is perfectly fine. But when your lifelong love, your spouse that you've spent your life with, someone you love and adore deeply, gets cancer, you have the money to take care of them because you've saved money. And money becomes the greatest thing you've ever accumulated in your entire life besides the love that you got from them. And you can provide them comfort and dignity. Now you're a baller. Not because you bought a yellow Lamborghini. So I had an uncle that passed away recently. He was a big man in a big world, in a big industry. He did very, very well, made a lot of money in his life. And he recently passed away. Again, a big, successful, powerful man, as well as lived a very comfortable life. But when he passed, people came to his funeral, and quite a few people just wanted to stand up and say a few words about him. And nobody talked about how successful or rich he was. They never said he had a yellow Lamborghini. Now, he never owned a yellow Lamborghini, but he could have if he wanted to. But nobody talked about that stuff at all. Puts everything in a perspective, huh? So you can defer your greatness. No one's going to talk about your TV when you die. So save your money. Put it in a retirement account. Let it compound tax-free for 30 years. And you will be a millionaire. Right? How many people here know who Jim Cramer is? Anybody? Anybody watch TV? Yeah? Okay. He's known as a great investor. He's really good at corporate fundamentals. Yeah? Okay, you don't like his personality. That's fine. Okay? Peanut butter hero. That's not necessary. You don't have to like his personality, but he's a TV personality. He can't even watch himself on TV, but that's what's required of him being on TV. But to say simply to do the opposite of him, come on, dude. Anyways, he's not an idiot, but he is a TV personality. Okay, he worked at Goldman Sachs. Right, was successful at Goldman Sachs. I can't remember, he didn't make it to partner, but I think he was a managing director or whatever. But anyways, he's a well-known investor, has a charitable fund, he's a multimillionaire. All that's all known. Okay, great. Did you know he was homeless? He was homeless for years before Goldman Sachs. For quite some time, he lived in the corner of his sister's studio apartment. But before that, he lived in his car. Why did he move to his sister's studio apartment? Because he lost the car. But we're not talking like for a week. For several years, he was homeless. But he put $50 a month into a mutual fund. And he studied finance and investing. Fast forward a few years, he's working at Goldman Sachs. And he's not an idiot because A, he got hired by Goldman Sachs, and B, he got promoted and promoted and promoted. Now, back then he had a crazy personality, so he definitely has a personality. But my point was, he knew even then, even when you don't got no money, you need to save for the future. Even if you're homeless, how do you stop being homeless? Well, I don't know if that was the success. I don't know if saving $50 made him a millionaire, but maybe the attitude did. And then obviously he's got drive. Somehow he got a hold of an education and got himself an interview at Goldman Sachs. Okay. Apparently one of the questions they asked him, they said, Jim, if we hire you to work at our firm, you will become filthy, stinking rich. What are you going to do with the rest of your life, Jim? I love questions like that. So anyways, they brought him on board, and Goldman Sachs is a very competitive, very performance-driven environment, a meritocracy, and he found his success, yes. So he's not a slacker, and he's not an idiot. So, and you imagine the attitude of, even if you only got $50 in your hand, that's going first and foremost for long-term investments. Okay? Well, very often, Milos, people at Goldman Sachs start working at the government, right? And they like that. Goldman Sachs people like that because, it's power and influence. You know people suddenly in government. Okay? Because they used to be a partner at Goldman Sachs or something like that, right? Very, 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 very common. So anyways, think of that. Maybe just the attitude of saving $50 a month, even though it's only $50 a month. Well, that long-term compounding will turn those numbers into big numbers. But the point I was trying to make is, Jim Cramer is a multimillionaire now. He was homeless. So I think if you have a ridiculous, sickening work ethic and a long-term focus, you can do anything, even if it's a little bit of money today. It was in boot camp, I think, 2 or 3 months ago. I asked people how many people were 30, and we had a few people that were 30. And I said, this is what number did I pick? $500 a month? I think that's what I said. Here's what $500 a month will turn into by the time you're too old to work. And we did the math, and I broke it all out. And at the end of your working career, around the age of 70, you have millions and millions and millions of dollars. I'm like, that's it. That's all you have to do. Done. Now, Neri says, I guess you're talking about Jim Cramer has his own mezcal brand. Smart guy for sure. Well, here's the thing with money. You don't have to be that smart. You just can't be stupid. Most people that make money are really, really hard workers. They're hustlers, and they do things like they defer their pleasure. But then later on in life, Neri, because of all the amazing things that you pushed towards as a younger person and all these things that you achieved as a younger person, suddenly you're sort of like my age or a little bit older. Suddenly you have all this money and you worked so hard up to now. Now you're like, dude, I want to do some cool things and I want to play. And you got this extra money. Okay? Just like when I break down to bank capital, required reserves and excess reserves, you have these excess reserves. Like, let's say you need $5 million to retire and you got $5 million in your retirement account. But then you got this other money. What do you do with this if you actually have $7 million in your retirement account, right? Maybe you take some out or find a way to, but now you can play with that extra $2 million, right, Neri? And you're like, mezcal. I love mezcal. So you go down to Mexico and you live down there for 6 months and you learn all about it. And you get to meet some of the companies and you do some tours and then you start meeting people. And you're like, man, I want my own brand. And you start talking to the people that manufacture. Like, hey, man, I want to strike a co-branding deal. I want to get into mezcal. I want to do my own thing. I want to do this and I want to market that. And I've met all these people and I'm willing to, I'll drop, $500K in to get things going. And then we'll do rev share and you got this excess, you still have $1.5 million or let's say $1 million left over to reinvest over the next few years. And this is what you're going to do, right? So a buddy of mine, when he was about 35, he retired and he had excess capital and he didn't know what to do with the rest of his life. He was in high tech. And so he thought about it and, he sat down at his table and he poured himself a scotch. Now that he had all the money in the world, he's drinking really, 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 really nice scotch. So anyways, he's drinking a scotch and he's like, what do I want to do with the rest of my life? And he thought about it. And he had another scotch and he's drinking the scotch and he's like, I don't know really what I want to do. Is it going to be in tech or something completely different? Am I going to go into real estate? Maybe maybe it's art. Has another scotch and he's drinking this. And he's like, well, the only thing I know for sure is I really like scotch. So it's been 20 years since he had that conversation with himself, but he's been running a whiskey company that he owns. He started his whiskey company 20 something years ago. What he first did is he moved to Scotland, got a job in the industry, and learned everything he could through formal and informal education. He worked at distilleries and everything. Then he had all the money in the world, so he's like, I'm going to start my own company now. And he also started in his own research and development to do things differently than everybody else. And amazingly, he can make in 5 years a scotch that tastes like it's 12 years old. It won't taste like a Macallan 21, but in the time it takes to make a Johnny Walker Red, he can make it taste like a Johnny Walker Black, which ain't bad, by the way. So he's been doing that now, and he's been featured in Whiskey Advocate magazine and everything, and he is happy as a pig in shit. And that's the cool thing about money. Right, Neri? You get to that point, and then, look, you take care of the basics. When you're too old to work, no matter what happens, you have enough to take care of you in perpetuity forever. Now, I want to manage that money for you to make sure that your money will live longer than you. And you'll have more than enough money to live on. Sweet. But then what do you do with all that other money? Anything you want, Neri. And that's the wonderful thing about money. If you just want to, give it to charity or start your own charity, you can do that. Okay. Yeah. Well, Richard, what you want to do is you got to get the base first. For those that want to get rich quick, it's the wrong idea. Now, the interesting thing about it, though, you will get rich quick, but not in the beginning. You'll get rich quick at the end. Okay? You'll make more money in your last 5 years than your first 25 years combined. So you want to save as much as you possibly can in the beginning, because the $50 a month you save in your first month will be worth, let's say, $5,000 a month in your last month. And you're like, think about it. The $50, you're like, well, $50 doesn't buy me enough. I need more than the $50 to really change my life. So the $50 is kind of meaningless in the short run. Okay? But on the last month of the last year of investing, that $50 is $5,000. And if you're poor now and you're like, oh my God, $5,000 is so much money, it would change my life if I had the $5,000. Well, that's the thing. You got to invest the 50 to ever get the 5,000. And that's compound interest. It's just compound interest. So you have to look at money that way. Money is an illusion. So you got to look at it. It's only $50 now, but invested over 40 years, that $50 is worth $5,000. So why would you go buy an expensive car? You're like, look at me. I drive a $100,000 Porsche. And you're like, yeah, but you only make $250,000 a year. You must be an idiot. Because that $100,000 is worth millions. You spent millions of dollars on a Porsche. Really? And you only make $250,000 a year? That's it? And you drive a Porsche? Pfft. Pathetic. It's embarrassing. Your mother's not impressed, right? So it cost you millions. Well, that's dumb. Because you don't look at money the right way. You look at like, what can I buy with my money? That's dumb. What do you mean buy with your money? Money's not for buying. Income is for buying. So you need to, and you're like, but wait, I work, I have a job. Well, you're perpetually poor in that point. If going to work every day, your job is to make somebody else rich. So that's stupid. So while they're paying you, you should save your money and then buy an asset that produces income. Now, it works to make you rich, right? So like real estate is a classic example, but it might be your Forex trading. Okay? Maybe you start a hedge fund and now you're managing other people's money. Well, that asset you invested money into, so you're like, I can't afford a Porsche. Like, for example, for the fund I'm starting now, one of the documents that has to be created is a private placement memorandum. If you're regulated by the NFA and you're more familiar with Forex stuff, this is your disclosure document. So your PPM is very similar to your disclosure document. How much does it cost to have your attorney create your private placement memorandum? Take a guess. How much does it cost? You call up your attorney, you explain what your hedge fund is, how it works, what you're going to do, and then they draft a private placement memorandum for you. How much is the piece of paper? Okay, more than 10, you could probably do it for under 20, but closer to the 20. $20,000. So if you go out and buy a Porsche with your $20,000, your Porsche is guaranteed to lose value. It will break down. You'll put gas in it. You'll put insurance in it. You'll have to put tires on it. $750 for an oil change. Meanwhile, it will lose money very, 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 very quickly. Peter says, like, yeah. And by the way, Peter, if you get sued, that probably won't protect you, that one, right? So it's almost, you pay 10K, but it's worthless. So instead you decide, I'm not going to buy a Porsche, but I am going to start a hedge fund because I love trading for a living. I want to do it all day, every day. And I believe I can help people because you're patient and disciplined and consistent. Great. Sweet. So you spend 10, 20, 30, 40, $50,000 and you set up your fund and off you go and you start trading other people's money so that you could do that for the next 20, 30, or 40 years. Oh, you'll be able to drive the Porsche of your dreams, just not in the first year. And you think people might be impressed because you drive a nice sports car? No, they're not impressed, in fact. Okay, that's a boy's dream. Later on in life, it'll be nothing for you. Nothing. Because you've created so much value in the world that a Porsche is nothing. You're like, oh, cool. I've always wanted a Porsche. I think they're really beautiful cars. Great. So you're like, you buy one. And it's like, huh, cool. Always wanted to do that. But people already respect you. Do you understand? If you want respect, create value. Car won't do it. Right? The car won't do it. Cool. So I'll leave it to it. What an interesting day. I'm waiting for a breakout, and I'm hoping, kind of. I mean, it's weird because I'm an investor in the stock market, but I've positioned for down. So it'd be very interesting if we start to get the move down. I won't be hurt by that because I've already prepared for it. In fact, I prepared last week. So that's the biggest thing I'm watching. I'd love the stock market to go down, and I'd like an opportunity to buy the oil. But right, if Saudi Arabia wants oil prices to go up, by all means, I'll help them. Okay. Right? So, cool. And maybe in the comments below, you'll leave examples of, if I expand FX or when I expand FX Bootcamp to offer more education in other investing asset classes, what would they be? What would you like to know more about in the world of financing? Or not financing, finance. Okay. For example, do you want to know everything about the hedge fund industry? Do you want to know bond math? Do you want real estate? Both residential and commercial real estate? That kind of things. All right. Peace on earth. May the pips be with you. May your profits be above average. If you're in my day trading group. Wait, is it Tuesday? Oh, yeah. Wait. Don't leave. We have a stop, look, and correct session today at 4. It's Tuesday, right? It's at 4 p.m. now. Okay. Day traders and swing traders are meeting. It's kind of like a swing trading meeting. We will meet at 4 p.m. Hang on. Let me show you. Hang on. Don't go yet. Hang on. So you log into FX Bootcamp, and then you go into the community side of the site. And I want you to go to challenges. And I might clean this up, but nonetheless, week 12. Okay, I guess this looks good. Insert a trade plan. Okay? Insert a trade plan into the create a swing trading plan section. Okay? And come to the meeting today. And you and I will go through your chart and analyze, critique your trade, your trading setup, your trading strategy, or maybe it's a trade you have already made. Maybe it's a trade you're thinking of making. But I'll ask you questions all about it, and I'll go through and I'll give you personal feedback on what you've developed. So remember, post an image and your thoughts, and then we will go through that today live. Okay? Richard says, can you make a template of a trading plan? You're a bear and you want to sell a lower high. Maybe. One of my ideas for the book, or for all the next 3 books actually, is to write it in a fashion where everything is step by step. I guess that's what you're asking for. Step 1, step 2, step 3, step 4, step 5. We could do it that way. The way I trade is you can flip a coin and say you're a bear for the next 3 months. So let's say it's July 1st, the beginning of a new quarter. You flip a plan, you flip a coin, catch it, boom. I guess you're a bear now for the 3rd quarter. So you sell lower highs. There you go. What trading plan? When it gets to resistance, follow the methodology I teach you at boot camp, which is crazy complicated. Sell a moving average cross to the downside in a downtrend. Done. It's a lower high. You're selling at resistance. 5/8 cross down. You should be short. Why? You flipped a coin and said you only sell at lower highs. Right? Like, trading doesn't need to be complicated. Humans are already complicated. What's your strategy? I'm a bear. Why are you a bear? I flipped a coin. Good. Now you only sell lower highs. Is this a lower high? No, don't sell. Is this a lower high? Yes, then sell. Couldn't be any easier. We're the ones that complicate things. So we can go through that. So you post your thought, and I'll ask you, why are you a bear? Why are you a bull? Why are you a bear on this one? What do you think about this? How did you account for that? Where do you see resistance? Why did you use this time frame? What will your trigger be? When will you know you're wrong? These are all kinds of questions I'm going to ask. Okay? But I think I will do the books in step-by-step fashion. I think it's kind of an interesting way where there isn't like chapter 1, chapter 2, chapter 3. Wouldn't it be cool if it was step 1, step 2, step 3? So again, your feedback on writing the books, I think, is going to be critical. I'm going to make a website for you to help me write these books. Keep me on plan, keep me on focus, keep my goals. I'll post my goals. Like this week, I'd like to write, 2,000 words. I might ask, like, what do you want to know? If I'm writing about oscillators, you can give me ideas. Like, and you're like, well, what about divergence? What about this? And how do I use the histogram? I'm like, oh, okay, cool, right? What about what do you do on this? And which one do you like better? And you might give me ideas to write about. Okay, that kind of stuff. And so I might end up doing that as well. See, what an amazing. So thank you for staying for the last 5 minutes. But remember, post that trade plan. And we will talk about it today, 4 p.m. So I'm going to update the website on the meetups, and I'll adjust the meetups for the stop look correct session to 4. And then I'll cancel the day trading for 4 because we're doing this as a combined meeting like we do on Thursdays. So, oh my God, so many awesome improvements. Peace on earth. May the pips be with you. May your profits be above average. Have a wonderful day. I will see you soon. Cheers.